But I'm so excited. I am going to bring on number one lender in Arizona, and she'll have to remind me where she's at for in the United States, because this is one of the most brilliant people I know, and she just happens to be our go-to lender. So super excited to bring on Lizy Hoeffer in the house, in her house because she's quarantined.
Yes, thank you so much. Oh my goodness, what an honor to be on live with you on your birthday. Happy birthday.
Yeah, and look how I'm drinking. Since I don't drink alcohol, but my kava, so I'm drinking kava bean with green tea.
Yes.
And my nicotine gum.
And your nicotine gum.
I don't smoke, just if anyone's watching this. I don't like smoking. I hate it. But nicotine's actually a nootropic and makes your brain smarter. And why not? It's my birthday. So you're super busy and you were answering calls up until the minute you popped on here. So really appreciate your time. And nobody is knowing what's going on in the market more than you. So I'm being a little selfish today because I want to know for myself, like all the ins and outs. There's so many things going on and it's changing. And what better to hear than boots on the ground at a super high level?
Thank you. Yes, so the lending industry has been very volatile, to say the least. I mean, so we find ourselves in a time that's very similar to back in 2008. Most consumers aren't really aware of like what's going on. You know, they hear of these large unemployment rates and, you know, that interest rates are super low. So you would imagine that everybody in banking is just making all this money right now and that, you know, that we don't have any problems. And it's really quite the opposite. So there is this huge liquidity issue in the banking space that has now, you know, kind of eliminated a lot of financing, especially in the areas of like luxury. So like any jumbo loans, anything over 5, 10, 400, and then has created, you know, additional conditions for people that are buying with minimum down. So, I mean, those two sections of, you know, the buying pool are being impacted the most. And we're seeing a lot of places that you would never really expect ask for government bailouts, like Quicken Home Loans. Looks like Wells Fargo is heading in that same direction. Mm-hmm. You know, so it is kind of nuts right now. You know, what I will say is that there's still so much financing available, right? I mean, down payments are still at 3% is the minimum. There's still some lenders doing bond loans, although that has, you know, and that's down payment assistance. So that has definitely decreased. And the credit scores have gone up. Most lenders right now are doing FHA loans at 640 and above. We're currently still loaning at all the way down to 580. But I mean, the climate is changing all the time. So still lots of financing to be had, but these are more the mortgage days of like 10 years ago.
I know in 10 years ago, it was like tight for a while and then it loosened up later. Mm-hmm. And
that'll be exactly what happens. There'll be all kinds of incentives, I believe. The thing is that right now there's just so much uncertainty with people's employment. And, mm-hmm. you know, the government has said, hey, across the board, there's this thing called forbearance, and you might not have to make your mortgage payments. You don't have to pay your rent, especially if you're impacted with a COVID-related issue. But they don't really have any qualifications for that. And they haven't really put out really clear guidelines on what qualifies you. Does anything qualify you? Can we ask any questions? You know, so a lot of that has a huge impact on banks, right? And so banking loosens up when there is money to loan and when there's investor appetite for purchasing the types of loans. So like right now, the riskiest ends of the spectrum, they just get dumped like a hot potato. And the core business, which is, you know, people with fairly decent credit scores, right? So the 640 and aboves with down payment and reserves, they have financing all day. And it's not that difficult. In fact, that makes it the majority of people who are purchasing, right? So it's not going to have this dramatic impact on people's ability to buy, but it does really impact these two sections of, you know, the buying pool.
So we were getting, when the feds announced that they were dropping the interest rate to zero, we got a lot of, oh, so that means I can get a 0% interest rate now on my house that I'm going to buy.
Yes. And that is the biggest misconception. So one thing that the Fed never does really well is communicate to consumers that the Fed fund rate has nothing to do with mortgage rates. So it literally is the overnight interest rate that banks borrow from the government to fund their loans, right? So it's short-term financing, and it has zero impact to consumers when it comes to mortgages. Normally, when the Fed does something like lower interest rates, what it does is it actually brings up the stock market, which typically you would see in a normal market has an adverse effect to mortgage rates. So mortgage rates are controlled by these things called mortgage-backed securities, and people invest in those, as a relatively conservative investment, right? So if things are paying more, like stocks, people tend to pull their money out of that, place it into stocks, and so that's why the inverse relationship.
Yeah, and right now we're not in '08. It's a different, every complete different set of circumstances, obviously. And it took a couple years before, and I don't know if you have any kind of forecast, but more like what I was going to talk about is the fact that unemployment is high right now, but it's also a transitory period. I was reading an economist, a local economist here, and they'd sent this out on Monday. It's like, look, this is the snapshot before COVID, ignore it. This is the snapshot today, ignore it. There's so many statistics out there that, yeah, they're scary, but what happens when we're off of lockdown and the non-essential businesses can start doing business again and bring their employees back?
Every recession brings back new innovation. When it's scary to hear that 6 million Americans are out of jobs. Like, that is super scary number, but all these amazing things come out of like slow times in the economy. Like the last recession, everyone became an entrepreneur. Innovation was like at its height, right? One of the consequences of that is that our trades, right, decreased a lot, right? And vital employees that you would have hired, you can't find. I mean, the talent is more scarce now, right? Because everyone works for themselves. Unfortunately, this recession is going to make a lot of small business owners go back to things like trades and go back to being, specialized employees, right? Because a lot of small businesses are being impacted, right? So, but we'll see a whole bunch of innovation that comes with teleworking and telecommuting and all of these Zoom calls. I mean, there's so much stuff that we have no idea about that's just going to develop from this in a completely different way. So I don't know that any economist can really predict that. But what will happen, right, is like we're in a completely different housing market than 2008, right? Most people have equity in their homes. Everybody has been well qualified for their mortgage, right? Many people with reserves. So it's not like the buy and bail days, right? It's
in Arizona too, because we were one of the hot spots in '08 because of all the false demand. Like, not people looking to move here, just people trying to make a quick buck. Let me go buy 10 homes, put $5,000 down on each house, then I could flip it 6 months later for $50,000 more. So it was a lot of like false demand, where over the last, now it's going on 12 years, it's been real demand. People like buying houses to live in, people buying houses for a second house, but they're living in it when they're here, not faux people.
Well, and the other thing is that, like, I mean, it's not like building has kept up with the demand, right? Like, something would have to significantly happen in the shift in supply and demand for housing prices to crumble. And if you've looked at or studied any of the past recessions, and I'm a nerd, so I went back and I was like, well, what happens during a recession? Well, one, there's been like 57 of them in our country's history, right? And then of the last 5 of them, only one had an impact on housing, and that's the most recent one, and that's why people automatically have fears about their housing. But most of them end up having an increase, and that's because, one, fewer people list their homes and rent becomes more expensive. So it's just economic laws, right? Like home values are more prone to actually go up in a recession.
Yeah. And I know like we had to like compare what we're going through with this pandemic to anything else like in history, at least in my brief history, 17 years in the business. It'd be more like 2001. But then after 2001, the values went up every year up until the mortgage bust of '08.
Yeah, I mean, that's just like what it is. I mean, we just don't know what we don't know. Do you know what I mean? Like, and it's just like what I always tell people, I'm not a psychic. I have zero idea what will really happen with the economy. I have, good guesses, but I also personally believe that you buy when your budget says it's ready. You refinance if your budget says it's ready. You sell when your budget says it's ready, right? And what I mean by that is like you always need a place to live. And because real estate is intended to be a 15 to 30 year long investment, right? I mean, even if you bought at the height of the market, right? This property that you bought then today would have equity, right? Now, if you were looking to sell it within a shorter curve, of course you could lose, but you could lose with any kind of investment. And I just
in my house now that I bought in '05 and we have outgrown, which is why I'm outside right now. But I bought it for $550 in '05. Went down to like 275,000 in 2000, like 10, 11, and it's worth 600 today. I've never realized it because I've lived here the entire time.
Yeah. And if today you found yourself in a position where like you were hurting economically, you have now an asset that would then help you. But like in 2008, when all of this was crashing, homes didn't support that. People were using their equity to sustain their lifestyles. Mm-hmm. And I mean, they couldn't sell their houses and get any equity. We're just like not in the same environment. It's just not even comparable.
And so somebody right now lost their job and they're facing hardship of, can I afford my house? They obviously, there's forbearance in place, but it's not forgiving their mortgage payments. So your advice to somebody that, I mean, obviously we don't know that each person's circumstances can differ, but if somebody lost their job facing a hardship right now and they own their house, maybe instead of forbearance, the better option is to sell.
Yeah, I mean, so every circumstance is going to be different. You know what I mean? So a forbearance for most people, so that they understand, is it's a delayed payment, right? And it's not a payment that gets tacked on to the end. That's a deferment. It's just delaying your due date. So if you have a 3-month forbearance, it just means on the 4th month, you then owe 4 payments, right? And so what a lot of people don't know is that they're just kicking the can down the road. And so what will change for you in 4 months? Are you currently looking for a job? Are your commissions delayed? Are you expecting additional resources, funds, right? Like what is it that's going to make a forbearance necessary? Now, you do have options as a homeowner, right? There is a department that every bank has called loss mitigation that you can contact to process a loan modification or to seek, foreclosure assistance, right? There's places that you can contact, but I have also been a professional in that market where that existed, and it's not easy. And you have to qualify for it, and it's not a guarantee, and it will have an impact on your credit. So as somebody who lives by strict financial rules, I think that if you have equity in your property and you know that you have income that is not sustainable or that's not coming in anymore, it's more prudent to sell your property, pay off your debt, have assets in the bank, and go into a rental until that time passes. That's my personal opinion.
Yeah. And of course, everybody's situation is different, and maybe it's temporary and they're going to be able to get their job back. Maybe they're furloughed and they can get their job back. If they're working in restaurants, we know that restaurants at some point are going to open back up.
Yeah. And Tina Tambor, actually. Hi, Tina. We love you.
I know. I was reading her comment. It's awesome.
Yeah. She makes a really valid point that the current unofficial employment number includes people that would never get to make unemployment claims, like all the 1099 workers. Mm-hmm. And all the self-employed people that could never apply. So yes, that number seems even larger. Yeah, Yeah. And okay. And she also wants us to bring up the fact that Save Our Home Arizona, there are departments within every municipality that have foreclosure prevention programs and grants, and you should definitely seek them out.
So Save Our Home Arizona. Awesome. We'll make sure to keep that as a resource for any of our clients or friends need that resource, because obviously this is a very stressful time for, I'd say most people are stressed. Even if you can't go to a restaurant and have date night, but and the uncertainty of everything is like going to be
just homeschooling your kids.
Oh my God. Yeah.
Like, can you just redo the first grade? I mean, come on here.
And I love my kids like room moms, and they're so amazing, but they're like sent me their itinerary and they're way far down the road. I'm like, oh my gosh, you guys, I was not prepared for this.
No, I know. I mean,
but yeah, but the people that have been really like that have lost their jobs. I mean, that is a tough position to be in. But to know that there are resources that we can help plug them into, it's awesome.
For sure. And, I know that it's not like a popular thing to say, but it is why you have an asset. If at the end of the day, we end up going through hard times and you own an asset with equity in it and you can sell it, I mean, perfect. You just saved yourself, right? There's no point of trying to hold on to something for emotional reasons when you can save yourself financially. I get the whole attachment, but also we have to be thinking about like the future you.
Mm-hmm. Well, I can say like, I have a lot of personal experience with this, unfortunately, because I lived through 08 and I was at the time of 08, I was building multiple luxury custom homes. I owned apartments. I owned multiple properties, and it was a tough time to do that and be in real estate. And there were I faced some serious hardship back then, and I did work with my mortgager to do a loan modification, and I was able to stay in my house. It was the better decision for me. But if I had been renting at that time, I would have been evicted and kicked out on my butt and been really strapped. So I can say that I'm thankful for being a homeowner going through the last roundabout. But obviously, I'm not promoting that just have a home so you can milk it when times get tough. But it was help that was there for me that would not have been there for me if I wasn't a homeowner.
Yeah. And it's also good that people get to hear like both perspectives. Do you know what I mean?
Mm-hmm.
But also going through that, like, was there an option to sell with equity? Sometimes there isn't always an option to sell with equity. Do you know what I mean? And so I just, there are loan modifications. And again, I just want for people to know that they have options, but you should also know that a forbearance is not a loan modification. It's just basically this blanket approval that they've given you not to make your payments, but they're still due. And what scares me about the whole like media attention on the subject is that people who can pay their mortgages and should pay their mortgages don't, because their neighbor doesn't have to pay their mortgage. Mm-hmm. And that kind of mentality is actually part of the reason that the Great Recession was as catastrophic as it was. Do you know what I mean? Like, there's no reason for you to not make your mortgage payment, because what ends up happening is that you end up causing a bigger domino impact, right, than you think, right? If a bunch of people don't make their payment, what happens if a Wells Fargo goes out of business or a Quicken Home Loans goes out of business? Of course, lending gets tighter and a lot more people become unemployed. I mean, it's not like you don't just stick it to the man. You actually stick it to the men that work and men and women that work for the man. Do you know what I mean? It's just
it doesn't make much financial sense either. I mean, like, especially we're in a totally different market than 08 again, because if I were to have rented in 08, I could have gotten a really cheap rental. Well, today my options are to live in my mortgage that right now my mortgage is way less than rent of this house would be. So if I were to go rent, it would be a lot more. But again, we're in different markets because we're not. The only thing about 08 that's similar is the fact that we are into some different lending guidelines. I don't know if you guys can hear that, but my pool cleaner is going a little crazy. We have, there's change. There's it's uncertainty and change. But the housing markets are completely different. And if Tina was on here, she would this is a loaded topic for her because a lot of the information I learned is like from her.
Well, what it is similar though also is the banking changes. I remember when I worked in 2008, I was a loan processor at that time. And there was this thing called the implodometer. And every day we would look and see which banks went out of business. I mean, it was so crazy and very nerve wracking. And the last 3 weeks of my life have felt like that. Like every day, you just didn't know what was coming, what was changing, requalifying clients in the middle of their process, which has been so brutal, especially for those of us who really, commit ourselves to our clients, really care about customer service. I mean, it is tough. And I look at it from a banking perspective, with the things that are happening. There's so much of it. Like, it's a shame that they don't teach basic economics in the banking system in schools, because so many people have no idea what's actually going on behind the scenes. But in terms of like the value of homes or the value of, or like the supply and demand issues here, I don't even think that we have any. I think that real estate values here are super strong, and I think that the concerns of the consumer just have to do with what they remember from the recession.
Oh yeah. I mean, I don't know how many of anyone that's watching has PTSD, but yeah, we all have. If you went through what some of us went through back then, yeah, you are going to have PTSD in your mind. Our brains are wired to protect us. And so they're like, hey, remember what happened last time? It's going to happen again. Well, it's not going to happen again because it is a completely different market. We have more people here than the amount of houses we have. And Tina, I don't know if you remember this, but when the market was at the worst, I forget how many, it was like 15,000 vacant houses, like with snapshot in time of how many homes were just sitting there vacant with nobody living in them. And it's been the opposite. Our rental market is super strong. Our housing market's strong. I've been monitoring the supply and demand, the Cromford report every day. We went down from 108 on demand to 99.8, which is like just a smidgen below 100. And 100 is that a balanced market. But what we're not seeing is the supply. So the supply, we're at 45%. We have been underbuilding for years, not overbuilding. Where are these people going to live? And supply would have to more than double to be able to sink our market. Yes. We're still well in a seller's market. It would take time. It would take drop off of demand. So we've been in the top 5 states for population growth for the last few years. That would have to go away. People would not want to move here. And at the same time, we'd have to have supply double, triple. And, I'll just put this out there for COVID is, from what I've heard, is UV rays help kill the virus. And not too sunny right now, but it's going to be sunny again tomorrow. And I'm getting my vitamin D.
Yeah. I mean, I think all of it is super valid. The thing that's crazy is that people always reference history when they want to worry about the future. And we don't know what we don't know. In fact, no one could have predicted COVID. No one could have predicted the housing recession. Like, these are all things that happen because a series of events took place and happened. You know what I mean? But like, what is constant are just like the basic fundamentals of economics, supply and demand, right? So many people come and move here. So many people want to live here. Demand isn't decreasing. So therefore, right. And supply is not increasing. So therefore value can't drop. Right. So it's just this whole thing.
And Tina brought another good point up is that, so demand, it's not that demand is declining. Like, what we're hearing from our buyers is we want to wait and see what's going to happen. So it's just the pause button on the remote control. And we've only been in this for weeks. I would say if we're going to invest in something, maybe the Psychic Friends Network might be a good place to invest some time and some money, because since we don't know what's happening, maybe they do. But yeah, there's just too much. We've never been through this ever. And social media is only helping like carry on a lot of like the myths out there and the doom and gloom and the negative headlines. So that's why we are doing things like this, because they're experts, boots on the ground. Like, this is what's really happening. Tina is my go-to. When I want to know what's going on in the market, it's not going to be going to Fox News or CNN. It's going to be going to Tina at the Cromford Report.
So one thing that Tina did point out is that she said that demand is declining. So again, I'm just talking about my anecdotal experience. I haven't really seen a decline in demand. We're still seeing lots of people pre-qualify for homes, right? And it's, I mean, so as a professional working in the market, I haven't experienced that. She's a statistician, so she looks at it on a global level, right? Mm-hmm. So, but what she did say is that the housing crash was years in the making and years in the recovery. This is weeks, right? And a very valid point.
Yeah, years in the making, years in recovery. This is weeks in the making and maybe months in recovery. Completely different. And not, so demand is declining, but it's not permanent. Some of it will be. There's going to be a percentage of the buyers that cannot buy now, but the majority of the buyers still can buy. It's just their fear and their uncertainty, and they want to, you know, and also logistics. A lot of our buyers come from out of state and they're not traveling right now.
Yeah. I mean, all super valid points. And, you know, look, guys, none of us really know like 100% what will happen. We have no idea what to predict with the virus. These are super scary times, and everybody's feelings about them are incredibly valid. We're just trying to give our perspectives and what we, you know, we feel and experience on a day-to-day basis. So I mean, take it for our, like, you know, more than 2 cents.
Yeah. And Tina said exactly what I said. People are mostly on pause. And that's what we're finding. A lot of sellers that we're going to sell, they're like, we want to hold off and see. Buyers that wanted to buy, we're going to hold off and see. Or buyers that are like, I'm stuck here in Minnesota. As soon as like they lift the ban, I'm coming out and buying a house.
You know, and one other thing I do want to mention, interest rates are historically low. And they're low to a point where they almost meet the rate of inflation, which is like basically borrowing at negative percents, right? Or almost at zero. And it's so important for people to understand that, because let's say values do go down. The monthly payment on your house is more impacted by your interest rate than the actual price itself. Mm-hmm. And so if you're looking and buying based on your budget, which is exactly what I tell people to do, because you can't time the market. None of us can time the market. No economist can time the market. They can only look backwards and say, okay, this was the best time. Mm-hmm. But if you buy to your budget, and let's say values go down, if you have this for a long-term investment paying 0% money, right? How could you really lose in the long run, mm-hmm. right? So yeah, definite things to consider.
I know. So the average selling price in 2005, it was $326. The interest rate back then was 6.5%. So your mortgage rate was right around $1,800 a month. Today's average price point is actually really close. It's like $318,000. That was as of pre-COVID, like early March, but the interest rate at 3.5%, your mortgage rate's $1,300. So you're pretty much buying a house and at almost the same price, but your mortgage payment is $500 less by buying it today.
Yes, I know. I feel like most consumers don't know and they don't understand and they don't have that information.
That you're not just buying a house, you're buying a mortgage payment.
Totally.
Yeah.
100%. And that's why you always do things based on your budget. I know I keep saying that over and over and over again, but there's real rules when it comes to finance. And if you look at the richest self-made Americans, right, like Warren Buffett, they follow these principles to a T in any kind of market.
Yeah, and you are one of the smartest people I know with money. I'll let you do your shameless plug, because you send your emails out on the money every week, and I watch it every week, and I'm learning, you know, with business and in personal, you know, like this is also a time like I'm saving a lot of money, not going to.
That's literally one of the best anticipated side effects of this are like how much money people are actually saving staying at home. Right? Mm-hmm. Like my team yesterday did this whole group chat on how much money they'd saved a week since being home. I mean, and it was like crazy the amount of money. Like people were saving like a couple $100 by not eating out every single day.
I know. Or like, yeah, there's nowhere to go. You know, it's like, okay, I'm going to hike. That's free. I'm going to take a walk.
Make a sandwich. I mean, people
and
send like,
I'm gonna get wild today and go to the grocery store.
I know, get an extra roll. No, I
Yeah.
know.
Yeah. Well, I know you're a busy lady, and it's my birthday, so
Yes.
but nobody I'd rather spend it with than you and Facebook. Now, as like kind of like final thoughts, like any advice, that you, or maybe like any like question you keep hearing over and over again that we might not have touched on.
Yeah. Here's the thing. I have a lot of people who ask me if it makes sense to purchase right now. And again, I'm not going to keep saying the budget thing, but yes, if it makes sense with your budget. And then two, if you know that your employment is solid and steady, move forward with it. If you know that there is a potential for your income to go down, don't put yourself through the headache and all of that stress. It's already the second most stressful event in your personal life, and the first is death of a family member. So if you know that your job is going to be impacted or your income could be impacted, yes, hold off, right? So that's my advice. So gainfully employed, green light; not gainfully employed, or yellow light.
Okay. And we talk about mindset a lot, me and you, offline, and like kind of putting money and mortgages and housing like away for a minute and just focusing on mindset, because even if you're not trying to buy a house, even if you haven't been affected financially, but you're home with your kids, you're home with your husband all the time, how, and not knowing what's going to happen, not knowing when you could see, your family. Maybe you have, I think Tina's still, I don't know if she's still watching. I think her mom is in a convalescent home and she can't go visit her. There's just a lot of like difficult situations we're in that's stressing us out personally. Mindset, like what are you doing to manage your mindset right now?
Well, that's a really great question, and it has been super difficult for me in the last couple of weeks. I've definitely had lots of moments where I have been in tears just because, so much is out of my control. So at the end of every day, I write an email on all of my wins. And I used to do this religiously. I just picked the habit up back this week because I really needed that mind shift. And so regardless of whatever went wrong that day, if I just concentrate and write as many positive things, it like trickles down to my team, and it actually helps me wake up and feel more positive for the next day. So, and it's a very fun thing to do with family members, to do with your teammates, to do with neighbors, anybody, right? You can get into a win the day challenge. And it's been super fun to do with our kids at dinner. Like, it's like, hey, tell me about your big win today. And it's fun to hear, it's fun to hear the new level that they passed in their game, or, the new turn that they can do on their bicycle. It's super fun.
Well, Shaylin got us a throw the burrito or something game that we're going to play with the family tonight. We love burritos and we like throwing things, so I think it's going to work out. But
the burrito, I love it.
Yeah, but I can say that, like, there's the good things that come out of this for me has been I've spent just more time with my kids, and that has gone a long way. And we were watching Netflix. If anyone's looking for a good show, Madam C.J. Walker, who my daughter did a book report on in the first grade. A Netflix show came out about her life. She was the first female millionaire, and she happens to also be African American at a time that they were very much discriminated against. So not only was she a woman, she was Black, and she was been the first female millionaire. So I love those kind of stories. My daughter, my 12-year-old, soon to be 13, got really into it, and so I think there's a lot of things that we can really appreciate that's come out of this, and less drivers on the road, so less slow drivers in the fast lane.
The world is cleaner, people are nicer.
Yeah, no, I do. Even the cold calls I get right now, I'm like, oh, you have a job. I feel happy for you, even though you're calling me and I don't want to buy your product.
You're like, oh, good.
Yeah. Well, awesome, Lizy. I will I just want to like tell you that as smart and as brilliant and as big of an operation as you run, like There's no ego. You're always trying to get better. You really, really care. You're so humble. And I think that attribute just, it really is a magnet to the people that know you. They love you because they know, you are who you are.
Jen, same, like really right back at you. I don't know anybody else in the entire world that tries to get better and learn more than you do. I mean, you're always learning something, challenging yourself. I mean, and also, I don't know anybody else who looks 20 years younger than like you do. I mean, you could easily pass for your kid's sister. I mean, it is just nuts. You look great. And happy birthday.
Still? Because
still. I think we could take a poll. Everyone would say you look amazing.
Don't look at my nails. That's one job I'm not trying to get from after the real
after COVID. Yeah, no, I'm good.
Awesome. All right. Well, thank you so much for joining us, and thank you for our viewers for watching. I'm sure they got lots of nuggets, and also for any consumers, any buyers, sellers, all the confusion that's out there. It's like being able to take it in and be like, no, this is what we know. This is at least what we know, but not too much that we don't know, and we can't talk to that.
Awesome. Well, we appreciate you guys. Thank you guys for joining us.
You want to sing me happy birthday? Because you have the most beautiful voice.
How about I'll record you a video and send it to you?
No, on Facebook Live. She got up on stage at another birthday party, and everybody could not stop talking about how amazing you were.
Yes, I'll record you your own private serenade.
Okay, I'll let you practice.
Too funny. We love you. Okay. Bye, girl. Happy birthday.
Bye.